Howdy, folks. Good Tuesday mid-morning. It's Dr. Jeff Camarda, of course, with your market update. As the markets have become more turbulent, we've decided to go ahead and give you updates as the markets kind of dictate, based on, if it's a quiet day, and you probably aren't too concerned or worried. But if it looks like things are choppy, so we're going to try to pace it, and then based on the emotion, the emotional quotient, we'll give you more videos as we see fit, and not necessarily on Monday. Jonathan and the portfolio management team are reporting to me a couple times a day on market issues, and I wanted to wait till the closing report yesterday, which he finished last night. So here it is. So I'll go ahead and read that, and then I'll give you a couple other observations of my own. He notes that advancing issues outnumbered yesterday. Monday decline was about a 2-to-1 ratio. That's good, with 35 stocks hitting new 52-week highs and 24 stocks hitting new lows, while volume was quite light. And the market continues to be somewhat schizophrenic, with some stocks doing really well and others really heading for the sewer. The major indices finished mixed following a choppy and relatively quiet day of trading yesterday. Tech-related issues and other growth stocks remained under pressure as the impact of last week's rally in global rates is still apparent. U.S. COVID numbers continue to quickly improve over the weekend, triggering a rally in the hardest hit industries. The relentless oil rally took another breather as the Russia-Ukraine tensions eased somewhat, but an armed conflict is still in the cards, I think probably high up in the probability poll. And Treasury yields edged lower, but then bounced back actually after surging to new pandemic era highs last week, supported by a rally in gold and major cryptocurrencies. So, overall, the markets still remain under a great deal of pressure. And while we've had a bit of a bounce, and the opening so far this morning is mixed to slightly up, and we'll see how it develops through the day. And if we need to burden you with another video. But we may be at an inflection point in the markets, as we have been concerned about for some time, in the situation in Ukraine, with massive saber rattling and the whispering, actually not the whispering, but the flat out heralding of maybe another major European war. It certainly could set the markets on a very vicious edge. So we carefully monitor the situation, and we'll go ahead and make investment and portfolio protection decisions on the fly as the data continue to stream in and the world changes. Interesting aside, though, and this is kind of still the fear gauges, I think we mentioned last week. A lot of folks are getting really concerned about the market, and the VIX is up and so forth. But the jobs report on this past Friday was spectacular. I mean, like the lowest unemployment, ever that I can remember, maybe ever. And I was wondering, actually, is this maybe because the work paradigm has changed, and with COVID and the availability of flex hours and people working from home, as many do, it just increases the number of people that are willing to work, or the employability of people. I think that there may be some truth in that, but the observation is that, gee whiz, the job numbers are up, so inflation is probably going to keep going up, and that's good for the market. And this was an article in the Wall Street Journal yesterday, which really just, caused me to scratch my head. That's puzzling, and still is just a maybe another wisp of irrational exuberance, and maybe one of the herald of the end of this last COVID, stock bubble. That we've been concerned about. Anyway, that's enough for the nonce. Thank you so much for watching. And again, we will continue to give you updates through the week as indicated. I'm taking Kim, by the way, away this weekend to celebrate our 21st wedding anniversary. Actually, we missed last year, the 20th, due to COVID lockdowns, but we're looking forward to having it. So if I'm off the map for a couple of days, that's why. However, I do watch my email constantly, so if you need me, I am here. Thanks so much for watching. Until next time, bye-bye.